delta. So we'll look at our put delta, and let's say we go to like a 15 delta put compared to a 15 delta call. I'm pretty sure the put side is going to trade for a lot more premium. Okay, but similar to what I did yesterday, it's like we've got 0.38%. So if we move down about 0.38%, that's opening maybe around 63.70. Room to get down to the 63.50 and 40 zone. Is that enough to, catch a low? Maybe. News at 9:45. We'll see if that influences as well. For what sessions, Rich? For what sessions? And then if I've got, let's see here, Dave P in the room, I'm going to email you back after the session, but Dave's looking for the waterfall income. Waterfall income, we've been rocking and rolling all week with master classes. So day one, day two, today's going to be day three at 1:30 p.m. Eastern time. Core strategy yesterday was a 90-minute advanced strategy session, which is one of my favorite ways to trade waterfall income. Um, I just I love the idea that I can give myself like a 10 to 15, sometimes even 20+% buffer in the markets and still make a good chunk of income. Also give myself like a $500 to $1,000 profit trap a lot of times. And there's a reason we've won, 93% of these live trades. Is the reason that this particular way I trade it, it's like 97, 98%. So losses are still risk defined. It's not like we're doing anything, naked where there's all of the risk if you're not right, but giving yourself a huge buffer. I like that kind of addressing waterfall income with two really simple strategies, core, and I call it my flex strategy. Okay. All I can learn from. Well, I know these sessions, if we're doing the live sessions here on Zoom, they're recorded. We also post this on youtube.com/financial wars. We should have a playlist here. Deanna, can you attest to that? Are we streaming these both? If you go youtube.com/financial wars, my watch list, if you go to live videos, so we've got the daily profit plan running live every morning. If you come into the watch lists or go to playlists, there will be the daily profit plan that's archived. So all these videos are being archived and thrown in here. So if you're watching live, cool, they're automatically archived in the channel. We can toss them into this daily profit plan work or playlist every day. So you can check it out here on our YouTube channel and just show up and trade live. Will the waterfall income class be available? Yeah, we should have that available hopefully today. Zoom would have had a chance to process that. We did that session for about 90 minutes, so we can get that posted in the masterclass and training session. Yep, 15 minutes, but okay, cool. So we'll get that posted today. All right, all right. Okay, so really quickly, we got about 20 minutes for the open. I want to take a rewind from yesterday with Watch List Wednesday. I didn't have an access token on my pinch point scanner, so I had to get a new one. But now I have it. So here's my pinch point scanner. I don't think anything really changed from my Telegram, but I'm going to confirm that right now. Let's go Telegram, click on the image, and what do I have? So CPB is in there, SO is in there, VNOM is in there, SRE, DNB, ESGD, SIGI. So same 8 stocks. Okay, so that's the same as yesterday. I'd like to price these out once I get my daily profit play session running. So I'll wait till opening bell, but these are some of the ones I want to price out. I would like to just confirm on the chart that they're looking pretty good. So I'm going to go daily chart and see how good these are consolidating. That would be CPB 32.35. It is certainly pinched. We're coming back down to, wow, 2019 lows on CPB. We check the fundamentals here. That's Campbell Soup, I believe. Yeah, Campbell Soup Company. So more of like a defensive play. CPB should be pretty healthy on the snowflake analysis. I expected better. Below estimated value, earnings forecast to grow, profit margins lower, dividend not well covered. Still, I mean, pushing a dividend near the 4.5%, 5% zone. Let's see what's trading for. Price to earnings, 21 times price to earnings. Fair value 71. We're down technically to some pretty attractive lows. Question is why? Like, why is this stock not better, right? And I mean, I know the stock's not going to offer a ton of premium. If we came back to like 0203 crisis lows, we came back to like '08 crisis lows. I mean, it's potentially another $8 to $10 lower, but off of 2020, off of 2022, just failed to get back to the highs. Um, Gosh, I wish. Well, I mean, it's pinch points one trade. Question is on pinch point, will we get the expected move? So if I go CPB here, no options available. I'll type it in right, dummy. There you go. Implied. Yeah, this is probably why I wouldn't end up taking the trade. Because the expected move even out to like 60 days is only $3. So if I go out 60 days, we got dollar strikes in a $3 move. I mean, unless we have a huge move somewhere, which may not be too expensive, but if I went, you know, there's a 330 move, I'm paying 290. I don't necessarily love that. Let's go up like $4 maybe. If I get any premium here. So for 225 and getting like a $3 move, I mean, we could probably hit a take profit there, but I obviously would like to see a lot more volatility. So probably passing on to Campbell Soup just for low volatility sake. SO is at 94. This thing's sitting near these recent highs. There's still plenty of support if we get a pullback. Let's take the expected move into consideration. Okay, thanks, Tiana. So waterfall income class from yesterday, the master class number 2 has been posted. Too much salt in their soups. Yeah, or the condensed version. I think that was one thing I had to learn when I was a kid is like you had condensed versus like the regular. I don't know. It was never like the best soup. Once old progressive came out, I'm like, oh, the fancy soup is progressive soup. But hey, when you're when you're in a pinch, food's food. Walmart dragging Campbell's down. I don't know, maybe. I mean, if you look at the story of like Kraft Heinz, I mean, it could be one of those like Kraft Heinz, Keurig Dr. Pepper, anything grocery related. I mean, it's not like they're the healthiest company. So if consumers are like, we're not buying, cheap or not, it's like we're not buying unhealthy, high sodium canned goods that are like, I mean, if you're in a bunker somewhere, then maybe you need some Campbell soup. But I don't know. I feel like the the spending patterns in grocery stores have been a little bit more elevated, thinking that you're getting healthier food when in fact just look at the ingredients and it's still just as bad, just sneakier labels now. So, all right. Next one is SO. This is Southern Company trading around $95. IV at 9.9. Let's look at expected moves. Again, super low in the expected move side, so that doesn't get me super excited about it. 250 wide spreads for a 378 move is just not enough precision on the option chain. That's a pass. VNOM. I think we already are in this trade, or maybe I put a pending order on this one. Yep, we're already in this trade for a November expiration. We got in for $1.25, $1.45, and I'm just doing a bull call spread. So three wide paid $1.45, looking to see if we can hit our profit target. So if we get some dynamic support on VNOM, we bounce up here and see if we get the 200 moving average to hold, rip back up there and make about 30, 40, 50% on VNOM. That one's already active. SRE. That one's not coiled very well. Let me see if there's another SRE. I'm assuming it's this one. Let me check the trade idea here. So SRE. So $80 and SRE's trading. Yeah, so okay, I mean that's the right one. Um, I'm looking for a bit more of a pinch. Maybe the daily's better. Yeah, that's a good pinch. Never mind. So we got a pretty good pinch right here. Let me check the expected move on SRE. October $3, I guess $5. December $7, but five wide. Again, precision in the option chain not allow me to take a trade that I want, so I'm going to pass on this one. $7 wide expected move, $5 wide strikes, just not good enough. Next, ES, not futures. Looking for the stock. Let's go trade idea. Price around 68 bucks. So I'm not trading futures. This must be the Eversource Energy. Yep, Eversource Energy. If this one has a decent expected move, I like the pinch on this one. This actually has been setting up since about July. So let's check ES, Eversource Energy. Nice pinch right in here. Pretty well supported off these dynamic moving averages. Could we drop lower? Of course we could. But if it's going to be up, pull back, and up again, if we get a rip on energy, we'll see. I mean, honestly, energy could probably go both ways. But let's try to find it here. So ES should be evergreen. Guess I'll type it in. Eversource. There it is. All right. Expected move. 264 and 527. Makes it a little tough on a 5 wide. 264 on a 5 wide. Just no thank you. I mean, an at the money is fine, but if I did a straddle there, I'm paying 389 for a 264 move. That's a terrible trade. So pass. DNB. 33 to 40 cents on a $9 stock. I'm not interested in that one. GD. General Dynamics. Now we're getting some movement. All right, GD. Let's go. General Dynamics Corp. Nice and pinch with a gap higher, 317. If we went out, we got a dividend in October, 57 to 92 days. I'll go 92. Fudge Muffin, man. I blame these option chains. 1871 move, which is plenty, but a 10 wide strike, that's not precise at all. Does make things very challenging. So again, not going to take that trade. And that's okay. I mean, this is why I spend the time to price these things out, because I want to make sure we have a fair price. SIGI, off of looks like a pretty rough earnings print. They missed, stock was down from 90 all the way down to 75, and now it's up to like 78. Starting to pinch a little bit. Let's see here. Expect to move 460 to almost $8 and 5 wide. Gosh darn it, man. All right. Well, for this pinch point scan, these 8 stocks, I don't have the volatility, or I don't have the expect to move with the precise option chain. So I'm gonna pause on trades for right now for pinch point. So no new trades based on what I see scan wise. I do want to take a quick peek at the pinch point, see what the get set is going. NVIDIA get set. Okay, I'll take a look at that one. Obviously, we have earnings next week. A range between like 174 and 183. Earnings are going to be huge and important, but also remember, it's like it may not be just a ripper of a move. SoFi, we actually took a trade on this one already and made some profit. SoFi's had some chop and volatility. AMD, the semiconductor space showing some pinches, which is making things a little bit more exciting. Robinhood getting a pinch, Target getting a pinch. All these are, I mean, at least a noteworthiness. I just started to see one on AMD, Robinhood, a little bit more coiled between like the 117 and 104. I want to see the expect to move on Robinhood or let it go a little bit longer. I mean, it maybe started to line up. It's actually looking decent. Let me see NVIDIA first. Just started on NVIDIA. Let's go Robinhood. Robinhood started around late July. We started to see some indecision on Robinhood late July. Let's check the expected move on this one. The stock is probably due for a correction. I mean, I would think it is, but one never knows. Sometimes what is in motion stays in motion. We just find some dynamic support. I mean, I think it's like Palantir's dropped by a decent amount, right? Palantir is way down here, but got bid yesterday. Palantir made a nice correction down to the 38%. That's 24%. I mean, right at the 100 moving average. catching, or the 50 moving average rather, catching a little bit of a buy there at the 38% fib. So 30 and 38%. This wouldn't be a huge surprise to see this level go back and retest the high. Robinhood, from right here, we could go up, we could go down. We'll see what that is. It's only about a $6 move to the downside, or maybe a $13 move to the upside. Check the expected move here on Robinhood. So we went out, let's say, to October. Come on, man. 20. Okay, so we have a $20 expected move 5 wide. This isn't awful. If I go 10, make sure I'm not overpaying for this. If I went 95 by 90. So I pay 307 to make five. I'm not going to take that trade. I want to pay like 250 or less for this trade. So we'll see if this makes an adjustment. Maybe I consider going out farther and get some more movement. I mean, it's been a pretty well bid stock. If we go out to either November, December with some animal spirits at Q4, we have a $30 move still 5 wide. So I could probably go 20 out, 25 by 30, and then a 85 by 80. Pay 284 to make five. It's a little bit better. If this is under five, maybe. Yeah, I'd like to get this trade for under five if I could. And it's probably cheaper if I go out towards the very, very end of the expected move. Pay 240 to make five. Like that's now we just need to see like all of the expected move. So it's possible it delivers, but I'd like to, if I can rake in like an extra $5 head start with my trade, that's a lot easier for us to hit a 30, 40, 50% take profit instead of going all the way out to the, expected move. So, all right. Anyway, I'll keep looking. I'd like to get our levels down for daily profit play this morning. Futures down about 0.35%. We're expecting a gap lower. Again, that gap lower doesn't necessarily mean anything because we could gap lower and then come right back up for the day. We could gap lower and push lower and still have all sorts of, price action. Yesterday is a good example of that. Okay. Don't let the first 30 minutes, dictate your decisions. We trust the process yesterday. We had 3 alerts. There were 3 winners. Even at the end of the day, coming all the way back to 6404, I still held my 6430 and 6440 sell calls. I just held them to close. I put my take profit in all day. I pulled in $1 credit. I put a take profit at 0.05. It never filled. Now, I could have gotten out, and I'm sure anybody else, when I posted in Telegram, if you want to get out at like 0.10, you could have taken that dollar credit. So up here you had the 6430 and 6440 for $1 credit. If you put in a 10-cent debit, what am I doing? If you put in a 10-cent debit, your broker should have closed that out. I put it at 05 and it sat there all day and it just cash settled. So I kept the full dollar yesterday, minus my fees, which would have been about $2.40 after 4 contracts. So anyway, today's a new day. And we do have Jackson Hole. We have PMI services and manufacturing this morning. So that's 9:45. That should be priced in a bit to the options market. I think if you're looking for at least a directional play on the day, it probably is best to wait until after 9:45 to see if the market actually makes a move. Wall Street set for lower open. Yes, we know that. But PMI numbers, look, PMI numbers are showing higher trends, and higher trends mean somewhat stickier, if not higher, inflation. The way to combat inflation is to still see the stock market go higher. I still think a correction needs to happen. We haven't had any meaningful pullback yet outside of that little, July to August dip. I just think we're going to do something similar to that. So either this is, up for a little flush, up for a little flush, up for a little flush. This is like a rising wedge that eventually rolls over, or this was the chance for the market to then make its way back down. Maybe there's some support here, some resistance here, and it just kind of chops around through the rest of August, right? Maybe both directions, and it's kind of a volatile swing. September, when the Fed cuts rates, is there a bigger move in the markets? Does it happen before that? I don't really know. Jackson Hole is kind of a toss up. Nvidia earnings next week will certainly be a mover. And then I mentioned this all yesterday. It's like, think about all the stuff we have to digest here in about 30 days. You got Jackson Hole this week, today and tomorrow. You got Nvidia earnings next week. You wrap up the month. September, you're going to have non-farm payroll and CPI and PPI data and the Fed, all within 30 days. Okay. So for day-to-day trading, let's approach every day with the day-to-day plan. I'm not thinking too much further ahead outside of having hedges out to December if I need them. Position myself in waterfall income for, good, steady, consistent 10-15% buffers. If we see a rise in volatility, if we see a jump in volatility, then I'm going to be selling more premium. I've got plenty of dry powder for that. We're a little bit elevated on the VIX right now at 16.43, but obviously if the VIX is going to be, retreating today or rallying today, just like we saw yesterday. So if we were up like 10% yesterday, it faded the entire way back down. That's a lot of volatility on the VIX. Volatility instrument. Well, it's a lot of volatility on it. So anyway, we'll see what this leads to today. Also had some good information yesterday, just kind of watching my levels that we immediately pushed towards the 50 and 100% ATR. There's a toggle on this where I can go from like strictly a 0-day expiration to a 3 to 4 day expiration. And what it did is it actually held. Do I have Tom in the room, by the way? Tom Oliver was in the room yesterday and he was asking 6350 put. And my comment yesterday was I'm not going to call the bottom. This volatility thing's going to keep going higher. But sure enough, this thing was right around 6350. It pivoted pretty hard and stayed up the rest of the day. So that, in fact, did turn out to be the low. Obviously in hindsight, I wish I would have sold the put at 6350. That would have been a great trade. Um, but I was willing to say, look, if we're going to see the market fall and the VIX, so, I mean, we saw the VIX rally right during the end of July, August. We saw the VIX rally over 20. So it doesn't take much for the VIX to go from like 17, 18, 19. But as I mentioned, all of these volatility suppression funds, this is where they step in, right? So moving to 17, if it's going to be basically suppressed, that's kind of the level that they keep it down. Okay, if it breaks above 17, it's like don't expect volatility to stop. We go from like 18, 19, 20 plus. Yes, we can revert, but it's like there's a lot of ceiling at 17. Once we break 17, we probably have room to flush up to 20 again, and we'll obviously see that reflected in price. There you go. Sandy says they did a couple 6,350 puts. There you go, man. What'd you get filled at? But did you get filled at 6,350 when it was down there? Or did you get filled on my, that was a pretty wide spread that I put on earlier. I did like a 64.70 by 63.50. We were 120 points wide from center price. Got filled for $1. I know it was trading for like $1.25, $1.30. So anyway, all right, we're watching the VIX at 16.43. We're opening up with a gap lower. Should see some price here in just a minute. Price is right down here, only down about 0.29. Let's see how high up I can go. We should have a slightly elevated VIX. So SPX at 14.2, August 21st. So can I sell a 64.60 and get some premium? 64.60 is worth 10 freaking cents. Well, I'm not going to take that trade, but I will go 10 wide and see if I can get maybe $1 to $2 on this trade. Let me see if I can get $1. Let's try $1.50 on this one. I'll go 10 wide. It's a 64.60 by 70, 10 wide, 64.65, 10 wide. I'm going to try to get $2 on that trade if price rallies. And then on the put side, we're starting lower this morning. VIX, if it's going to shoot up a little bit, we want to give ourselves a little bit of wiggle room. I hate calling the bottom when I think the VIX can rally, but how low can I go? Right? So from the close yesterday, around 1+%, what we're looking at on the measured move. 16.47, 16, I'll just go probably like a 1.05. So from price here, 1.05. So 63.25 or so. So could I go 63.25 and get some premium? 63.25. I can get some good premium at 63.25. Wow. I could go 63. All right, I'm going to see if this trade will fill for $2. I'm going to go 6,300, which means price would have to fall from the previous day. 6,300 puts us around 1.4% to the downside. So if this fills at $2, I'm going to take this trade. 6,300, 10 wide, 62.95, 10 wide. I'm going to put this in for $2. It's not filling, it's only trading for 70 cents, but I'm essentially going to go put my call spread and put spread above and below for at least like $1.50 to $2 credit and see like which side is maybe going to be tested. All right. So for my daily profit play in the Telegram alerts, I'm just going to post this right here in Telegram. I don't have this as an official fill yet, but pending orders is what I'm going to type in. I'm going sell 64 on the call side. I'm going 64.70 call, 64. Actually, it's 64.60. So 64.60 call, 64.70 call, 64.65, and a 64.75. Pending order, not filled. Okay, and then on the put side, I'm going a little bit lower. I'm looking at 6,300. And then the 6,290, 6,295, and the 6,285. Okay, so a couple pending orders not filled. Construction's underway. Get some real-time levels. I mean, it's pretty evenly distributed right now. We opened up at the 50% ATR. Now I can see price kind of jumping back and forth. So either, if we're going to hold this 50%, do we come back up into the positive negative gamma flip area? Do we maybe make a rally up here to 50%? Do we fall down to 100 and then find some support? I mean, price is going to do what it's going to do. I'm just trying to get some trades running that are out of the way. I prefer to sell as high as possible, right? If I sell the 64.60 today, that's way above the 100% ATR, and we would be opening well below that anyway. So that type of move, let's say that we get all the way up to my 64.60 today. From this level, 64.60, I mean, that's a one. Oh, yeah. So now I almost want to see, could I get like could I get something in like the 64.30 zone, 64.40 zone? Let's find out. Maybe sprinkle in a little bit different. 64.30, 30 by 40, 35 by 45. Same thing here for $2. Pending order. Okay, I'm just going to put in some pending orders right now. We have news coming up in 10 minutes, so let's see if that gets the market to jump at all. I'm going to add another pending order in here. Okay, so not filled. So pending, pending, pending. All are posted in Telegram. So I'm looking for at least, if I'm going 10 wide, I'm looking for at least $1. At least $1. But I'm trying to get $2. So if I go 10 wide spread, 10 wide spread, I'm trying to get $2. So basically it's um, dollar per trade. And that, I mean, it's a pretty high probability because my deltas are really low, right? This is like a 5 delta, 3 delta, 2 delta. These are really, really low deltas. Um, and same thing on the put side. If price is going to fall, then fall enough. Okay. I mean, I suppose from the gap lower, there's two ways I need to measure this. Maybe that potential bottom would have to shift. So if we have the, 1.0, let's go 16.5 VIX. It's going to be 1.03. So 16.5 divided by 16, 1.03. So if we go 1.03, that puts us to around 63.30. Okay. We go from the open, let's say that price doesn't make a high today, and we go down 1.0. It's like that's a 63.15. So I'm putting in a sell put at 6,300 And hopefully, if we're going to see price directionally moving somewhere, that this gets us filled on at least one of these trades, whether it's the put spread combo, the call spread combo. I'm hoping I get one of these trades filled. Okay. Okay. So, I mean, honestly, I'm just going to hang out right now. I mean, we're 8 minutes in. We got news coming in 7 minutes. I just want to see. I'd be tempted, obviously, to put in like just a standard daily profit play where we just kind of box it in for the guardrails for the day. But if PMI gets us a news move, and I don't know if we're going to, maybe it's up here a little bit, maybe it's down here. But in a 0 day environment, those quick moves in price can throw around your deltas and your prices pretty quickly. So I'm just going to let the top and bottom trades kind of marinate for the day. Um, I'm putting in, a couple levels here. I'm looking at selling this area, and I'm looking at selling this area for calls, and then I'm going way down here on the puts at 63. Okay. If price doesn't do anything today, I mean, that's unfortunate. I guess I'll try to figure out something in between. Um, but it's a Thursday. I usually don't see a lot of sideways Thursdays. So I'm thinking that the market's going to possibly move. I don't know. The whole thing with Jackson Hole is like you never really know the schedule. I know that Powell's due to speak tomorrow, but as things kind of start and kick off, I mean, maybe there's some weird pricing going on today. Okay, so I say we just kind of hang out and see how the day unfolds. We've got news coming in about 5 minutes. Okay, let's see here. Waterfall income class today at 1:30 p.m. Do I have anybody that's in my waterfall income that's been in my master classes so far this week? Why the heck is my camera all blurry, by the way? Video. Did I like spit on my camera? That is so weird. All right, well, I guess I'm just in a dream sequence right now. I'm blurry. Okay. Oh, so I was gonna ask if everybody's been in the classes this week. I'm hoping that it's either one, a nice refresher on what we do, two, you're jumping in, drinking from the fire hose with like the strategies. But we broke down core strategy day one. We broke down the to me, my I just call it my flexible strategy day two. Today we're going to kind of put it all together and just get ourselves a game plan, get more comfortable, talk through buying power, talk through risk, and kind of when the opportune time to focus on these trades is. Some of it is timing based, some of it is volatility based. But we're talking about a strategy that is going to probably produce, 95, 96, 97% winners. The way that I trade it with my discretion, I'm trying to win this thing as much as I possibly can. It's not going to be perfect. I know that. When the market does something really, really stupid, we might take a couple of losses, right? But what's funny is we talked about this yesterday, where it's like, okay, look, during the rollover this year, when the market was down in February, March, and in April before it bottomed out April 7th, there were only 2 to 3 weeks that would have been problematic. But if we went out enough time, those trades wouldn't have been bothered. Like there's risk in the trade because we dropped, more than our buffer, but the reflexive rally from the seventh bottom to the ninth rip, that was enough to get us out of trouble. Okay, but we did take a couple. We took like one loss in the entire month of like March and April. It was one trade that was back from January. But even through COVID, never had a losing trade. Great financial crisis, it would have been 2 weeks. Would have been losing trades, and then you had like literally 100 trades in a row, and I'm not exaggerating. 100 trades in a row that were winners. So if you're interested in learning something like that, that's what waterfall income is all about. It's one of my favorite. Show up and trade every Monday. It's not day trading. There's no pattern day trading rules or anything like that. It's just a nice income like swing income on indexes. So, but yeah, I get it. Like we had a lot of information to unpack, but that's why I'm happy to spend all the extra time. So the workshop series this week is hopefully helping bring people on board and make sure that we understand when you come into the live sessions on Monday or you see the trade alerts that I post on Mondays, that it's all making sense and why we're doing it. Okay. So I just hope you can see all the comments there. Dave says cleared up. Good refresher, good education. Yes, fire hose, which Donna, you've been with me for a long time, so Donna's used to that. But Donna's also the first one to say, like, stick with the education. It's very consistent, right? Inspire me to keep digging in, continue to learn the long term. There you go. So bring on the fire hose. Good. Uh, is it just because I talk fast? Is that the fire hose? I know it's a lot of information sometimes, but it's funny because I'm not like high energy anything. Like this is just kind of how I am. But I'd rather be this way than, was it Ferris Bueller's instructor, Ben Stein? And we watched that old show on Comedy Central, Ben Stein's Money, where he was kind of like, it was like a trivia game that you had to beat him. I mean, at least I'm not that guy. I'd feel pretty droll if that was, yeah. So it could be that guy. I could just teach like that. Okay, everybody, today is about waterfall income. Anyway, all right, good stuff. So, okay, we've got news here in 2 minutes. Watching some key levels, and maybe the magnet for the day around 30. That's my biggest gamma level. If we start to see price rallying higher, we see the VIX. Two things. If we see the VIX going down, then I might put on an aggressive put spread right here. So if we see this move happening, I might put on an aggressive put spread and see if we can get some directional plays right away. Maybe we can grab a quick 50 cents to $1 on that trade, and maybe this market wants to run back up to this kind of gamma pivot point, or maybe run up into that 64, 30, and 40. Which, like I said, based on the VIX, if we're going down on the VIX today, it's going to be tough from this intraday low to hit it, right? That's like 0.99, that's a 1% move. But obviously, we also can start from here, which 1% puts up to around 64.60. So I don't want to get in too much trouble on this trade. In fact, I might bump these call levels up a little bit. In fact, I'm going to do this. That 30 and 40, I'm going to change this. I'm going to go, so I'm doing 30 and 40. This is 60 and 70. So I'm going to go 40 and 50. 40 and this would be 40, 45. See if I can get this one filled for $2. All right, so I'm going to modify this in the Telegram 64, 40 by 50 and 45 by 55. There. So we've got the 40 and 45, 60 and 65 all pending call side, put side 63 and 62.95. Price reaction right out of the gate is a little bit lower on PMI. So maybe they came in a bit softer. I mean, can I get some premium today? I mean, maybe I can get a 5 wide here. Let's go 64.10. A little bit close to the expected move. Like, this isn't bad. I get 50 cents out of that trade. Let's see. 60 cents. Let me try maybe this one. So I get $1 if we stay below 6,400. That's just it's in the yeah, it's just it's in the way. It's in the way. Just gonna hold off. So it's tempting, right? If I'm looking at, okay, if I can sell a little bit more close to price, this high was 64.05. Well, if I'm selling 64.05 or 6,400 calls and price goes down for the morning, like I can grab some premium. The only problem is based on an expected move inside my rule of 16 for this VIX, we could, fall lower and be right, but also price can find support down here, right? And this is what market makers do the best at. Price comes down here, finds some floors, and then pulls back, right? The plus minus on the day is about 30 points. So are we really going to see a price that's dropping from 95 down to like 6,300? We drop in 95 points today. I mean, if there's lots of intraday hedging, then possibly. So it looks like right now the best thing, there you go, Greg, jumped right in with bear call spread. Best thing realistically would be if I can get filled, either the puts get filled or we see price find some support, go back up into this gap, and then I can get something filled up here. So I'm just going to try to play it somewhat safe today and just get filled at a good credit. I'm not going to take and settle for like a mediocre credit, but we'll see what price does. I mean, I think price has a little bit more permission to roll over. Two things happened this week. One is we got back inside this July 31st high, and two is we took out last week's low. So to me, that means that this high is likely not going to get hit. If we took out this week's low, I think this high is not going to be hit. Okay. So if anything, this is a breach, a little bit of a retracement. If there's some follow through, we'd be looking for some fresh lows either today and tomorrow. Okay. So I'm just watching, 6405 was yesterday's, near the end of the day. This was the close. 6405 was right here. We've got the closer on 6395. But can you see how price is like just not going anywhere yet? I mean, so far this actually has been a pretty solid, even through the news. It's like it's been a pretty nice indecisive, 20 minutes of trading. So that's probably a good thing for like the standard daily profit play. I just don't love trading those on Thursdays. And I did, Rich. I changed the instead of going 64.30 for my call side, I went up 10 points. I did 63 64.40. So I moved them right here. So this bottom one was an adjustment. I adjusted those. I'm still looking for $2 credit on this one. On the put side, $2 credit. On the call sides, $2 credit. Any of them. Okay. And I mean, hopefully we get a trade to fill today. My gosh. Give me something, yeah? Are any of these trades offering a dollar? No, no, no. The closest one would be my put side. It's offering about 80 cents, 70 cents right now. A dollar for a 2 grand risk though is pretty stupid. So I'm going to say like give me at least $1.50 to $2. I think the probability is high. I just want to see if I can, I'm going to accept maybe like $1.50 to $2. I've got a pending at $2. I would accept the $1.50 if I can't see much better than that. But other than that, I'm just sitting and waiting right now. Okay. And while we kind of hang out on that, I think this is a good visual. If anybody's in my waterfall income, I'd like your feedback on this, but I'm going to use a blank chart here. We'll go blank and we'll go weekly. Actually, I've got blank too because I had to make a new blank space. This one is good, 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 good. I'll get rid of this one. Okay, let's go weekly chart. Okay, so day three masterclass for waterfall income. Here's a really nice way to think about this strategy. It's two core strategies, okay? And I want you to think of even through what could be like a difficult period, i.e., this pullback here, this pullback here, these pullbacks here, this pullback during COVID, these little pauses. How about this pullback and rollover in 2022? Okay, that's a lot of crazy trading that this strategy helped me survive COVID with consistent income. This strategy helped me survive 2022 in a legitimate 9-month bear market with consistent income. This helped me survive 2024 with all the cautiousness that I had of like cautiously bullish, right? 2025, I expected the market to fall and it did. We only took one loss, and that was because we were up at the highs in January and I took one loss. The rest have been winners. So I'm just going to give you a nice visual. I did this yesterday. I think it made some sense. I did, Jason. All the trades that are in Telegram right now have been edited to what I'm in. They're pending orders. Okay. So just to give you the quick summary of this, and we'll deconstruct this whole thing in class today at 1:30 p.m. Basically, if you start your trading day every Monday with about a 10 to 15% buffer, meaning this, I'm going to go ahead and measure here from this open, right? The candle opens here. Okay, candle opens here. We go 15% lower. Okay. So I'm going to go ahead and draw a box and try to get like a 15% box. Make sure that's about right. Okay. I'm going to take that box just up a little bit. There. So this is 15% that I can kind of copy and paste this. All right, 14.9, close enough. All right, so here's what I want you to think about. I'm just going to take this box. Did anything invalidate this box low over these trades? Jason, I appreciate if you don't post these in the chat. That's my Telegram for members. The second update, it's the 6440. That was adjusted because I put 6430 originally. Now it's 6440. So that was the edit. All right. So if I'm trading right here and I start my trade at the lows, right? This is my waterfall income strategy too. This is one of my like flexible strategies as I call it. Did price invalidate this? Yes or no? Over these 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. I mean, it doesn't. You go weeks and weeks and weeks with no invalidation. Okay. So how about if I did it here? Does it invalidate? No. How about here? No, 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 no. These are all winning trades. All of these are winning trades. With that 15% box, these are all winning trades. Okay. Now, it might get a little dicey in here because price does have a way to get down to this level. But over the course of this correction and even this pullback, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, that's over 2 months. That's going to be like a 60 plus day trade, which usually we're trading these like 60, 70, 80 days out. And that should be enough for some profit. Okay. And if you keep going, did it invalidate here? Okay. It was down, then back up, down, and then back up. As long as it stayed above this, right? This is the 2018 Volmageddon event. It stayed above this after how many weeks? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Looks like 13 weeks. So about 80 to 90 days. So we trade a lot of these with like 60 to 90 days. My point is, I can drag this around and see that all of these are winning trades. All of these are winning trades. Every single week is a winning trade. Okay. Even with the pullback, you can absorb it. Even with the pullback, you can absorb it, and so on and so forth. If we get into any trouble, okay, that might have created a loss, like one loss here, and then this one was fine, this one's fine, 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 fine. All these are fine. And then you have a bunch more winning trades. And then the market keeps going, and you keep having winning trades week after week after week after week. Now, how about this environment? This was COVID, right? This is COVID. That would have been a pretty terrible trade. However, look at how fast COVID went. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That's 10 weeks out. Okay, so that's just over 2 months. It would have been very close from this trade being a loss because by the time we had like 10, 11, 12 weeks, we were right back into break even. It would have totally been dependent on our timeline. Now, the reality is, I'm just going to say I took a loss. Okay. If I took a loss here, I didn't take a loss here, and I didn't take a loss here. I didn't take a loss here. I didn't take a loss here. I didn't take a loss here or here. And then off we go again, right? It's like the market has to do something terrible for us to take a loss. And if we have a loss, it's defined risk. And then our winners are just super, super consistent, super, super consistent. And you have a winning stretch here that is like undefeated literally until the top in 2022. And then you have possibly a loss. But I say possibly because we go down and then we come back up. There's enough time here to get profit. All these trades over here are all winners. Okay, over here gets a little bit nastier because we go down, but we come back up. It's going to be close. I'm just going to say we're taking a loss. Maybe, one or two of these would be losses, and then these are all out of the way. Profit, profit, profit. Okay, so I showed that yesterday just to think in context of this is how we can win, 96, 97, 98% of our trades. A lot of these trades I'm taking with a high probability anyway. My favorite time to take these trades is when prices are falling, right? If we have a little bit of a dip in the market, I tend to go to the strategy. So an example is when we had that little dip in, I'll move this over here. We have that little dip in July. So this fall right here, when the market fell from July 31st to August 1st, near the August 1st lows, Volatility was up over 20. The VIX jumped up to 20. I sold premium for over $5 on the SPX and the SPY. That's 500 bucks with a high probability profit. Okay. And I did that on seven of my, I think 7 or 8 of my accounts are portfolio margins. So I mean, it was a pretty straightforward trade. It's a nice chunk of profit, nice chunk of income, and as long as price stays, I mean, basically price has to stay within, I think 20% of the current price, and I can make money. So anyway, it's a fun strategy, and this is what we're going to continue to work through today for day three's masterclass. So if it sounds remotely interesting to have something super forgiving, huge margin for error, give the market essentially anywhere between 15 and 20% buffers, or if you want to go tighter, you can go 10% buffers. Okay. But we can all work through an options chain. I can show this today where, 10% forgiveness, 15% forgiveness, 20% forgiveness. You're getting the markets finding dips and bottoms there a lot, right? Penny, if you're taking weekly profit every trade 69 days out, you have 8 to 10. It can be, yeah. You can have some stacked orders, but like I said this to the group yesterday, I don't like to have more than like 5 or 10 trades on this particular strategy running at any given time. It's a little bit more cost intensive. This one might cost me anywhere between like $1 to $2,000 in buying power. So it does add up if I'm stacking up 5 or 10 trades. But if I have that capital to take this position, the probability of profit's really high. And we also give ourselves a nice little buffer. The trades we have running right now, in fact, I can show you right here for waterfall income. The trades I have running right now are actually looking pretty good for some profit. Here's SPX. This one is up about $100 out of the max 160. This one is up 90 out of the max 125. This one is up 10 out of 230. So I want this one to continue to work a little bit more. There's some time in this one. This one is up about 72% of max credit. This one's up about 60% of max credit. So I'm going to hang on to these because this one also gives me a potential $500 profit trap. This one gives me potentially a $1,000 profit trap. This one gives me a $500 profit trap. So not only do I have a credit of over, let's see, $1.60, $1.25, and 230. So that's 2, 3, 4, about five. It's like $5.15 or something like that. So we're like 515 or 520 credit. I can have $515 here just in credit, and I can have another potential $2,000 in profit traps. So if we're lucky on a trade, we could have up to like $2,500 in these trades. Okay, if we're just hitting our normal take profits, we'll have close to 500 bucks. Which going out, 40, 50, 60, 70 days, making 500 bucks is pretty good. Nice little swing trade, takes a couple months, make 500 bucks, and you can stack them up. So anyway, it's flexible. It's a good strategy to learn. I'm happy to teach it. That's what I'm doing for today at Waterfall Income, 1:30 p.m. today for masterclass number 3. All right, we took a look at Pinch Point today. That was my watch list Wednesday. Pinch Point, I didn't like any of them. We had 8 stocks in the go zone, but the strike prices and the expected move were not conducive for a good trade, so I'm going to hold off on that. Project Options Edge, I'm going to send a video out. There's 2 videos I need to post this week before tomorrow. I'm going to post a video for double up alerts. It's going to be my iron fly strategy, which we talked about a lot of the butterflies last week. I'm going to talk about the iron fly in a video. And then Project Options Edge, I'm going to do a position update video since we have some open positions there as well. A lot of those trades are out to like November, December, and January. A lot of ratio spreads. Again, like willing to own some shares, do some campaign trades, repair. I don't like to lose on Project Options Edge. I've got plan Bs and plan Cs. But I'll do a video update for double ups in education, and I'll do a position update on Project Options Edge. Okay. All right, good stuff. So, as we just kind of let prices just marinate for the day, gosh, man, what is price going to give us today? I think, I mean, it seems like 63.50 is still holding pretty firmly. I mean, I don't know this for a fact. Obviously, it's like I'm trying to play the safe like levels where we're going. Here's a really good calculated low. Here's a good calculated high. Market makers expecting on the SPX today about a 26 to 30 point move, right? So we're trading at 75. That puts us maybe I didn't take this trade, by the way. This is offering like $2. It's tempting, but it's in the way. If we're coming up to any of these ATR levels, right? So we hit the 50 on the bottom. If we hit like the pivot, that's 64. We hit the 50%, that's 64.16. I'm not going to get this trade in the way. Or if I am going to get it in the way, let's see if we hit like 50. This 100% would be like 64.4. That's where I'm selling anyway. Yeah, don't get in the way. Don't get in the way at 6,400. I think that's too tight. I think we could go to probably like 15 or 20. So don't get in the way. If we can sell something to like 63.30, maybe these lows are a little bit safer. I don't know. It's again, this is a total guessing game in a 0 day environment. The safest trade is to be patient and call your levels and follow my rules. I'm talking to myself, like I'm talking out loud. The reason I do this VIX rule of 16 and use my ATRs is because this is unlikely going to see price invalidate these highs. VIX is at 16.39. It's actually going down right now. I would imagine just after 10 o'clock, if this is the direction the VIX is going to take, like this, then if the VIX goes lower, that's probably going to push prices a little bit higher. So if you want to do something a bit more aggressive, maybe selling a put at the 63, 50, or 45 zone and just want to see if price can stay up above that. But if I'm going to take that trade, here's what I will say. If I'm going to do 63.50, like right now, it's offering about 275. If price goes up, that's going to be a nice winner. There is a lot of risk in this trade, right? So maybe the better trade is a 50 and 45, 30 and 35. I get $1.50. I can also level back in if I don't like it. Let me see if I can shift these a little bit. If I can get $1 out of this, that's $1.15 for a 45. This one's close, 63.40. All right, I can get $1 for this. I'm gonna go after, can I get a buck? Lows at 57, lows yesterday at 43. Oh, it's so tempting. There we go. Now we're getting $1 and change. Son of a biscuit. That is a 16 delta. I mean, if the VIX is taking a cue from this little indecision coming into the top of the hour, if VIX comes down, then we are probably going to be pushing up into this positive negative gamma flip zone. It's just I mean, it's either way. This is a tough one today. We have a gap right here we could fill. We've got our positive negative gamma. We have a pretty big support zone as well as resistance zone. I think, again, I'm going to try to be disciplined here and try to stay responsible. It's too tempting to just call the intermediate levels. So I'm not going to. If I'm going to take sell trades today, I want it to be higher or lower. Okay. And that way, if price is choppy all day, like I might not get a trade that I want. If you like the standard, if you like the standard iron condor or the standard daily profit play, that's fine. Um, it's a Thursday. I don't love doing those totally neutral strategies on Thursday, but it's already proven that it's been profitable. I mean, for right now, it's like we're 35 minutes into the open. The news is already out. Price is essentially right back to where it started. So a lot of traders, if you took the standard daily profit play, you should be in profit already. So I mean, you're 30 minutes in. If you're looking for like a 15, 20% winner, you probably have it. Okay. So like I said, it's tempting. I like what the VIX is showing us, but I don't feel like being brave and like calling this as the bottom. Let me see if there's some firmer levels here. So this is my 0 day. You can see that we're lighting up all over the place. We've got some, lighting up on the call side. We've got some levels on the put side. We're probably getting some reactions off of this. We've got our positive negative gamma flip level around 6,400. If I update this to the rest of the week, so this would be like today and tomorrow, where are my key levels? Okay, I'm getting less flow to the call side coming into tomorrow. So, I mean, something tells me we're just gonna like stick around these like kind of support zones. I don't see us going too much lower than like 63.20 today. But I just don't feel like being a hero and trying to call the bottom at like 30, 63.40, 63.45. I think that's a little too tight. So I'm going to say this. If I'm selling calls 64.40 or higher, I'm selling calls. 63.20 or lower, I'm selling puts. I'll type that again since I typed it like an idiot. So 64.40 or higher on calls, 63.20 or lower on puts. I don't want to get in the middle in this muck because I don't know if prices is going to chop around all day. Well, that's obviously great. In hindsight, it's like, oh, I should have. Well, it's fine. I mean, I've done the data. We've done this thing for 3 years. I don't like to trade on Tuesdays, Thursdays, Fridays if I think it's going to be indecisive because usually it's not. Usually the market catches a bit of a flow in direction for those days. So selling calls up here, selling puts down here. That's going to be my game plan. So race, is it too late? It's not too late. Nothing's too late. If it's going to stay choppy for another 20, 30, 45 minutes, it's perfectly centered right now. If this is just a big indecisive Thursday, that's great. But in case the market feels like going somewhere, I'm just trying to stay out of the way. So I'll let it do its thing. Hopefully we get a trade that fills. So I'm trying to sell at 40 and 60 and 70. I guess it's 40, 45, and 60 and 65. And I'm trying to sell down here at 6,300. I might be willing to bump that up a little bit to like maybe the 10, like 63.10, 63.05. Let me look at that right now, actually. So if I did, if I did the 63.10, these are like single digit deltas. If I did the 10 and the 05, I mean, it's only offering 40 cents. I'm not going to take this trade for 40 cents. This would have to be like another $2 fill. So I'm just going to wait. I might not get a trade today. If price is totally indecisive, I'm not going to get a trade. But it's okay. No, I'm not. I'm not. I'm going to stick to them. The put levels are going to stay around 6,300. Okay, so let's do this. While we're letting, and I've got pending orders. So right here, one, two, three pending orders. None of them are close to getting filled right now, and it's okay. Like for the day to unfold, it's like I don't have to be in a trade in the first 5 minutes. If I'm not really sure what the day is going to give us, then I'm gonna wait. You know, zero DT is an environment that you don't just toss trades in. If you toss trades in, you will either win or you will lose, and then it's all a matter of risk management. So whatever trades you take in a 0 day, you're going to win, you're going to lose. It's that simple. Now be comfortable with that loss, whatever it is. Be comfortable with that win, whatever it is. If you're proving right directionally, you can get wins very quickly. If you have to sit and you're sitting upside down, you're going to see like almost max risk. So it's not an environment to like trade stupid. So I'm gonna wait. But while those are waiting and pending, I'll highlight those if anything gets filled. I'm going to switch gears here because we have waterfall income coming up today at 1:30 p.m. for day 3 of my masterclass series. I'm going to bring it up and let's talk about it. Like I said, just think of that visual with all of these weeks like this, like all those weeks where it's like you've got yourself about a 10 to 15% buffer every single week. And I would expect to be holding, if I'm taking this trade, I don't take the trade every single week, by the way. Okay. What I like to do is I like to stack up these trades when price is down a little bit, then I like to get in. Like I like to kind of stack up like a 60, a 75, a 90-day expiration because that way I get this huge buffer and price is already down, so I can kind of take those trades. So these are fun to trade on Mondays or also try to trade on like Fridays. If we finish a Friday on a close that's low, there's a good chance that that is going to be a buffer. Like the market's going to have to push another 3, 4, 5% lower, another 5, 10% lower, which is hard to do. We know, especially if you've been trading any time in the last decade, most of the time this market finds a way to go up, tries to. Okay. See your Greg, I'm seeing your question or your comment. Center was 63.70, 15 deltas were 64.10 and 63.25 in 30 minutes losing. What? Really? If any of the pending trades get filled, how do you exit? Well, I put the trades on together and I close them together. So if any of these trades get filled, if I get filled here for $2 or $2 or $2, I'm just going to set a debit at probably a dollar. I'm just going to try to grab, if any of these get filled, I'm looking for 100 bucks. That's going to be my plan. And if it looks really good where it gets filled and price is going to go, higher, like these are all calls. So if I get filled at $2 and price starts to fall, then that should easily give me a dollar, which means I can enter for $2 credit. I can close it for a dollar debit. That gives me a dollar winner. But if I can try to keep some of that $2 profit, I'm going to try to keep that $2 profit. Okay. And Greg, I'm going back to your question. That's kind of crazy, dude. I mean, center price around 73. We're trading at 85 right now. Um, what deltas you said? 15 deltas? Yeah. That's I mean, I don't know, that's weird. That I thought that the kind of indecision for 30 minutes would be pretty good. So, I mean, opening here, center after this close, 75. I mean, it's up 12 points, I guess, but that shouldn't make the call sides too aggressive. I mean, right now you're 64.15, still a 15 delta. That's weird. Um, Let me know. I don't know. Hit me up in Discord or something. Let me know that I'm hoping that trade works out today. Because I thought for a Thursday, I don't like trading the standard indecision, the range trades on Thursdays and Tuesdays. You know that, but yeah. Let me know if you win. Okay. All right. So I'm gonna switch gears since I got the workshop coming up at 1:30 p.m. today. Let's jump into it here. Okay. And if anything gets filled, Bill, I did answer that question to Penny. Yeah, we could have anywhere between 5 and 10 trades running at any given time. I have 8 open positions right now in waterfall income. Okay, what other announcements will affect price? There aren't really any other announcements today. Jackson Hole is starting. There's never really like you never know what's going to happen during Jackson Hole. I mean, PMI came out, Jackson Hole. It's all about Powell tomorrow. We had minutes yesterday. We have Powell tomorrow. That's the Jackson Hole, in my opinion, is maybe some wild price action tomorrow. Maybe it's kind of chill today because it's the day before Jackson Hole with Powell. I don't know. So, like I said, if I don't get filled today in a trade, like it's okay. Not losing money is fine. Not forcing a trade is fine. I'm just going to try to exercise some discipline today. But hopefully, I can get a bit of a get a feeling for where price can go and where I can be safe and try to sell a put or try to sell a call and try to find a winner today. But certainly not forcing a trade. All right. So waterfall income workshop today at 1:30 p.m. 97.1% win rate, average hold time 11 days. The examples that you're going to see in this prezo, it's a $5,000 risk. Now we can scale that up, we can scale that down. I have traders that are willing to risk 10, 15, $20,000 in some of these trades to make two, three, $4,000 of income. This is a standard stake of 5K to make roughly $1,000 every week. That's roughly what the math works. Okay, so about a 16 to 7% average return on risk. Our live win rate is 86 winning trades at 92.4%. Again, our hold time between 11 and 20 days. Okay, this has been one of my biggest edges in the market. This is what I'm happy to share with all of you. I want you to get to the point you're trading where a win and a loss feel about the same. I'm annoyed with losers, but I'm not pissed at myself because I'm never risking more than I can afford to lose. I'm always keeping trades within responsible percentages. Okay. So thanks for being here today. As always, spent a lot of time in the markets trading indexes, stocks, options, futures, forex, cryptos. I've probably logged tens of thousands of hours in the markets trading and now teaching for the last decade. I've certainly seen a thing or two, but I've survived a lot of things. I've been in the market since 2000. I've certainly seen a thing or two. What we've been noticing these last few months has been pretty alarming. The markets are pretty crazy. Governments around the world have become pretty reckless. You got China printing $5 trillion to backstop their markets with real estate and stock prices. For the first time in a long time, you finally have Eurozone spending as well. They're boosting defense spending, but the fact that it's fiscal policy versus austerity is a big difference coming out of the Eurozone. And of course, U.S. is spending like we've got it. U.S. is spending like we're at a crisis level. We're increasing deficits and debts like crazy. We're probably going to get to 40 trillion, I would imagine, by Trump's term. So in 2027, 2020, we're probably at 40 trillion, if not more. Who knows? No sign of slowing down. Inevitable outcome. We're already starting to see this. Microsoft is increasing prices on their Xbox. PlayStation is increasing prices on their consoles as well because of tariffs. So a second wave of inflation, higher prices across the board. It's probably what we're going to see. And we've all been dealing with it since 2020 anyway. That persistent, sticky 3, 4, 5, 6% inflation, rising cost of everything. It would be more devastating because everyone's been hoping and praying for rate cuts. Unfortunately, rate cuts might not change borrowing costs at all. And so we don't want to see stickier, higher inflation. But if you care about your famous financial future, which I think you do, then pay close attention. This is one of my favorite income techniques to handle steady, passive, retirement-based income or just steady income and offset that cost of living. We've had this would be 87 winning trades. We have 8 running, 3 in profit. I think we're going to get 87, 88, and 89 together. But if you're joining me brand new, this could be trade number 1, right? I started out with 0 last fall, and I've logged 86 winning trades. We're going to log a lot more trades. We're going to log a lot more winners together. Okay, so before we get started, I want you to think about this. For a $5,000 investment, what if we could target right around $1,000 each and every week? Sounds pretty good, right? 20% return on risk every single week, like clockwork, 1 trade, 1 ticker, same time each week. And I mean that pretty literally. We're talking about taking the same trade on the same ticker once a week. Monday in March, same time, same place, place the trade, shut the computer down for the rest of the week. Everything works out. That $5,000 risk, $11.44 in income a couple days later. Next week after that, same time, same place, few days go by, automatically close out for you by your broker platform, $11.86 based on that same $5,000 risk. Nice return. Very next week in March, March 18th, rinse and repeat, $12.97 on a $5,000 investment. Okay, you can scale this up, you can scale this down. It doesn't have to be $5,000 at risk, but $12.97. Final Monday after that was no different. Same time, same day, same ticker, $11.50 in income. Okay, even though the stock went down, it didn't matter. We still made money. So all that for the month of March was almost $5,000 in profit, and that's 1 trade, 1 ticker, same time each week with the same starting stake. So I call these weekly income payouts weekly windfalls. They have the power to pay us, and they do pay us when the market goes up, down, or sideways. It really doesn't matter. 12-year study now, 97% win rate, an equity curve. I couldn't ask for anything better. It's silky smooth, bottom left to top right. It compounds really nicely, and it's all about risk management. It's defined risk. What's that look like? Imagine taking 100 trades and winning 97 of them. Those 3 losses are only going to set you back about 5 or 6 trades, by the way. So it's not like 3 losses take away 20, 30, 40 trades. It's going to set us back maybe 5 or 6 trades. So with numbers like that, can you see why I want to share this with you? Can you see why I'm running a 3-day workshop this week? So in a moment, I'll reveal why we trade every Monday around the same time every week. Before we go any further, let me be very clear. There's nothing guaranteed in the markets. We don't know the future. I don't know the future any better than you do. There's no instant income magic pill. Okay, this technique is not about gambling on home runs. Just because I place a trade live does not mean there's a certainty to it. I place trades to win. I expect to win, but I know it's all about risk management. This is a realistic approach that's designed to help give folks an opportunity to target steady income on a weekly basis. My favorite way to do it. It doesn't matter if you have a multi-million-dollar retirement account. It doesn't matter if you're starting out with a few hundred, a few $1,000s. You can learn this technique, and I will teach you everything you need to know to do this technique. Standard brokerage, internet connection to your app, your broker app. A couple minutes each Monday to trade with me. We trade live every Monday at 12:30 p.m. Eastern time, and I try to make this very, very easy. Okay, but if you want to join me live today, we'll deconstruct the strategies. I'll do an overview of core strategy 1 and our advanced strategy 2, and how we've logged all these winners together so far since last fall. Okay, anyone can target the income that you're comfortable with based on risk and reward, and essentially do this hands-free. We take the trade, broker has to take profit, we walk away. If that gets you excited, stick around. This is weekly windfalls. Okay, so I've been in the markets for a long time. You come trade with me every single day in the daily profit plan. I love it. Let's make this room huge. Let's share the knowledge. Look, we're just a bunch of retail traders trying to make some money. Okay, so my favorite tool to trade is options. I think it is the best tool for a retail trader to trade and learn, because all you trade is price and time. It's difficult to get every high correct. It's difficult to get every low correct. But if you trade price versus time, it just means we have a line in the sand running at all times. If price is above this, we can make money. If price is below this, we have some risk. But it's all predetermined, right? So if you want to manage risk, options is the best way to do it. Plus, I show up and trade live with you every single day. I'm in the trenches right alongside you, placing live trades. My top followers making a killing: Ken and Kathy and Randy. Randy's 200 plus wins in one of my services. Lynn from 4K to 20K. This is a brand new technique that maybe you've never seen before. Jump into a live session today, the masterclass. I'll show you how we're going to lock in probably our 87th, 88th, and 89th winning trades, all by targeting some extra income each and every week. Before we dive in, it's important to remember that, of course, there's no get rich quick button when it comes to trading. Just because I'm taking the trade, again, be smart. Don't over leverage. Understand the risk. Understand the reward. Understand where price has to be for us to have risk and reward. These trades are designed to help grow our accounts over time. With that being said, this is a great time to be in this strategy. It's no secret that nearly everybody, young or old, is feeling the strap of cash right now. All thanks to that little